Welcome to the Evening Review. My name is Sokhane Tlhache. Today we're joined by the Chief Economist of the Bank of Namibia, Florette Nakusera, to talk about the impact that the COVID-19 pandemic is having on the financial sector. But before we go into that interview, please have a look at the front page. Welcome to the Evening Review.
Yes, good evening, Okhone. Thank you very much for having me at this platform.
We would like to know, given the COVID pandemic, since the advent of the COVID pandemic and now living through this pandemic, what impact has it had on the soundness of the financial sector and the financial system in particular?
So we met as the Macroprudential Oversight Committee last week. And as we have indicated in our statement, the financial system is fairly sound, it's still resilient, and it is still safe. So in terms of getting that comfort to the Namibian public is that the financial system is still sound. We have in that process assessed both the banking as well as the non-banking financial sector. And on the banking sector side, the banking sector still remains solvent, they are still liquid, and they are also resilient. And on the non-banking financial sector side, we have seen that they also sound, and it has still the prudential limits above, capital ratios above the prudential limits. So from that perspective, the financial system is still fairly sound. However, what we have seen with COVID-19, I have to say, Okhone, is that the unfortunate part is household indebtedness have increased because COVID-19 just added on to a situation that was already for the past few years. We have the problems of the macroeconomic challenges that we had as the economy was contracting for some time, very low economic growth, and that has obviously impacted on the income level. So disposable income has come down, people have lost jobs. So COVID has also exacerbated that. People have lost jobs. There are a number of sectors that were impacted upon. One of such that was the hardest hit is the tourism sector. And we have seen what is happening with the airline industry, what is happening at the airport, although there are some of the tourists that are still coming in. Now, as a fact of or an impact of that, is that some of the companies have closed down, some of tourism establishments have closed down, and as people are losing jobs during this pandemic, it is also impacting on their ability to be able to repay the banking loans, and therefore non-performing loans ratios, obviously, as we have been looking at the asset quality of the banks, that has been impacted negatively, and more so also the ratio as we are looking at it, debt as a percentage of disposable income. But what we have done as a financial stability sector system stability committee, as well as the Bank of Namibia, who is ultimately having that macroprudential oversight, is that on the banking sector side, what was done is that from the monetary policy have cumulatively cut the repo rate, and ultimately that translated into equal cuts in the what we call the prime lending rate, to which customers are being lended by a cumulative percentage of 2.75%. We call it 275 basis points. So that has also helped that customers, because when you are servicing your loans, at least you are getting in, paying less interest, and therefore slightly giving some relief in terms of the payments. Not just slightly, actually. If you look at it cumulatively, you will see a sizable amount of the installments that you are paying are now less because of the interest that is less, and interest rates are since independence at its lowest level. So that has been also helping. While COVID has affected the country, it has also helped cushion. We also provided other relief measures that have given more funding towards and access to funding and capital for the commercial banks, and so that they were able to pass it on to those customers that before COVID, they had good records at the banks. They were able to then access those funds. The non-banks also equally have been given some relief measures by NAMFISA, and they have also translated some of these relief measures then onto the non-banking financial institutions. So those were some of the impacts that we saw, but also in terms of measures that help cushion, and therefore our conclusion finally that it is still sound in terms of the financial system. Thank you, Okhone.
You touched on the issue of non-performing loans, and we've also, from the data that is being shared, is that private sector or credit extended to the private sector remains mooted. How do these two things now sort of pose a threat to the soundness of the financial sector?
So in terms of private sector credit, if private sector credit is muted, which means that when we say private sector credit is muted, it means that it is at a lower level compared to where it was. And in that private sector credit, what we are assessing is new loans, new credit that are being taken out. So what it means practically is that because of the fact that COVID has impacted upon the economy, that has now impacted on productive, because there are no new jobs that are being generated. So from the demand perspective, people are demanding less, it impacts on the economy. But how it also then impacts further is that there are no productive capacity that is being created in the economy. So from the supply perspective, the businesses that should have been there are also then not being able to take out loans because there's simply no demand in the market. So for you to be able to conduct business, there should be demand so that you are able to provide and supply to those that are demanding the services, the goods that you are producing. So from the private sector credit extension, and that's why we said in our statement that we don't foresee any particular risk from the private sector credit extension, because it remained muted. It is at all-time lows if we compare it towards how it was a few years ago. So in all, under normal circumstances, you would have seen that private sector credit would be higher because people are demanding from business side as well as from the individual side. But now it is fairly muted. So the difference between these two is where private sector credit is looking at the new extension of loans. On the other side, what we are looking at household indebtedness is that over time, and because of COVID-19 pandemic, the household indebtedness have increased and started stabilizing. However, the disposable income has come down because people have lost jobs. So when you look at that ratio, because of the declines in disposable income, that has impacted that the disposable income as a percentage, or debt as a percentage of disposable income ratio has increased. And that is what we have been assessing.
And then I would like to know, we're looking at the pandemic, we're still in the midst of people of vaccine hesitance from members of the public. It's been noted that a good number of us would have to be vaccinated before we can start to see growth in the economy again. But besides that, what other threats does this pandemic pose on the financial stability going forward?
So there are a number of threats that we have seen, and in our assessment, where we looked at one of such is in terms of the macroeconomy. So we assess and we looked at those risks globally, domestically, regionally. How is it affecting us? And we have seen that fairly on the global front, you know, with the successful vaccination rollouts, it has been quite successful in some of the countries. And that's where you see the economy started opening up. Regionally, you have also seen that some of the economies with the vaccination rollouts, although it's still quite slow in Africa, some of the countries have actually managed to vaccinate about 60% of their populations. So that has helped them, cushion them to some point. But in terms of the risk factors that we have assessed, and we are assessing, apart from this macroeconomic events that I'm talking about and risk, we also assess corporate debt. How does corporate debt compare, and how does it weigh up against risk to financial stability? We also look at, obviously, the household debt I have earlier alluded to. We also look at public debt, which is government debt. And then we also look at payment systems risk. Is there any risk that is coming from the payment system side? Are the payments able to then being settled within time that it was agreed upon, and are there no other hindrances in terms of the windows of the settlement? And then we look at the NBFIs, which is the non-bank financial institutions, risk that might be coming from there. Are they solvent? Are they liquid? Are there any credit risk from the non-bank financial sector side as well? And then we do what we call stress testing as well. So we stress test the financial system. So we would say, let's say if we shock the system with interest rates maybe increasing by 100 basis point or 200 basis point at a particular point in time, will the financial system be able to withstand that shock? So those are assessments that we do periodically, and what we have also done at last week's meeting to be able to provide that feedback. So we build in scenarios. We say baseline scenario, if there is a moderate scenario, and then an extreme scenario, what do we say under the worst case? And that's the extreme that I'm talking about. So those are the scenarios that we build in. Now, after we have done this assessment, what we have seen in terms of the vulnerability is the one that you have spoken about is the vaccination rollout and the slow vaccination rollout. Now, worldwide, we have seen, particularly with regards to the developed countries, how the successful rollout of vaccinations have helped them to start opening up, to support their economy. Events are starting, curfews are being lifted. As some of us might be seeing, the European soccer stadiums are filled up. People are starting to live normal lives in some of the countries, and that we can only do if many of us become vaccinated and we build up what we call a herd immunity. The more the people are vaccinated, the more you build up that herd immunity. So that vaccination rollout has impacted, and we are seeing risk coming from that as well. The other risk that we also see is with regards to the unrest in South Africa that has recently happened. As we know, our economies are interlinked. Our financial sectors are interlinked. So if there is a lot of insurance claims, obviously some of our companies are having their head offices there. But apart from that, the shortages that could be there for food, that could be, we have seen some of the adverts, some of the companies have given assurance that they are going to make sure that food products will be available, but some have cautioned that there might be shortages of medicine, etc., and so on. So that interlinkages that we have with the South African economy because of those unrest could also potentially pose some risk going forward. And that build up of those vulnerabilities, obviously, with the asset quality, as the jobs of COVID have caused, and that asset quality ratio that is at a higher level than what we had last year, which is now around 6.5%, as established at the first quarter, after the first quarter of 2021, in terms of the non-performing loans. So asset quality, we check it against the ratio that we check asset quality is what we call the non-performing loans ratio, as people are not able to repay some of the loans that they have taken out, so that impacts on that. And then obviously the debt to disposable income risk that I have also touched on earlier. So those are just some of the risks that we foresee going forward with regards to financial stability. So we are on a continuous basis monitoring this risk and would take the appropriate action should it be required.
And then in closing, in terms of Namibia's growth prospects, are you seeing any green shoots or do you expect recovery to be subdued?
At this point in time, we are currently now busy, and we will be able to tell the Namibian nation probably after 2 weeks when we release the economic outlook, what the exact numbers would be with regards to growth. What we are currently looking at, and preliminary what is coming out, is growth between 1 and 2%. That is where we are currently now. We had earlier estimates where the expectation of a third wave was at the time that we expected it not to be there. And then, you know, winter started, the Delta variant came, which none of us foresaw, and that has impacted again for us to have gone into lockdowns. Also us as a country, as cases were increasing, and the tourism market, again, one of the ones that are being impacted upon largely, has been impacted, and that has actually drawn down some of the gains that we thought that from the second semester we are going to be able to get more. So that has really impacted, and therefore the growth numbers are going to be, yes, it will be positive, but it will be a much smaller positive than what we have earlier on estimated, if one judges by the preliminary numbers that we are currently looking at.
Thank you very much for joining us on the Evening Review.
Thank you so much, Okhone, and it was good talking to you.
Thank you. That was it for the Evening Review for the week. Please do stay tuned for our Olympic coverage. Good night.
We were born for this moment. For every rise, every fall, to make the impossible possible. To create moments that inspire and live the thrill of excellence.
On the grandest stage of all.
Forget the past, for the future awaits. This is that moment we've all been waiting for pride, for country, for you.
Brilliant performance that was.
The Olympic Games Tokyo 2020. It's go time on GoTV. Love it.